The Minority Market. Episode 2. Why do 90% of traders lose money? Most people enter the stock market thinking it is a place to make easy money. They believe that if they just learn a few charts, follow tips, or watch the news carefully, they can succeed. Reality is harsh. 90% of traders fail consistently over time. Understanding why this happens is not about pointing fingers. It is about learning what separates the minority from the majority. If you want to survive and eventually thrive in markets, understanding the psychology and behavior of the majority is your first step. The first reason most traders fail is emotional decision-making. Fear and greed dominate every action. When prices rise, excitement pushes traders to enter impulsively. When prices fall, fear causes panic selling. These decisions are rarely based on logic, probabilities, or structured thinking. They are reactions, reflexes that have been conditioned over a lifetime to respond to threat and reward. Most people treat the market like a casino, thinking that luck will favor them if they act quickly or take bold risks. This is the mindset that leads to failure. Imagine you are on a crowded bridge, and suddenly everyone starts running in one direction. Most traders behave like this crowd, following the movement blindly, without knowing why. The bridge may collapse, or they may be running towards a trap. The minority, however, observes, analyzes, and chooses their steps carefully. They do not panic, they do not blindly follow, and they do not let the crowd dictate their actions. Acting against the instinctive reaction of the majority is uncomfortable, but that is exactly how the minority survives and profits. Another critical factor is overtrading and impatience. Beginners believe that action is always better than inaction. They open multiple positions, chase charts, and constantly monitor price movements, hoping to catch every opportunity. Over time, this leads to mistakes, losses, and emotional burnout. The minority understands that markets do not run on urgency. Opportunities will always exist, but only for those who are prepared, disciplined, and patient. Waiting for the right setup is far more profitable than reacting to every fluctuation. Lack of rules and structure is another reason for failure. Most traders have no plan for entries, exits, or risk. They rely on tips, guesswork, or intuition. One impulsive decision can erase weeks of careful analysis. The minority survives by creating clear rules, measuring risk, and managing expectations. Success is not about predicting the market perfectly. It is about following your plan consistently and controlling what you can, your behavior, your risk, and your mindset. A deeper reason lies in misunderstanding risk and leverage. Beginners often underestimate the impact of losses relative to gains. They over-leverage positions or invest more than they should in a single trade. When the market moves against them, the loss is magnified, often leading to emotional collapse. The minority calculates risk in advance, never risks what they cannot afford to lose, and maintains capital above all else. They understand that surviving today is more important than winning tomorrow. Another trap is overconfidence after early success. When beginners have a few winning trades, they feel invincible. This is dangerous. Overconfidence leads to larger positions, ignoring rules, and taking impulsive risks. The market punishes overconfidence swiftly. The minority, however, treats wins and losses as data, not validation of self-worth. Every trade is feedback, not ego building. They measure success by discipline, process adherence, and emotional control, not by how quickly money is made. Information overload also plays a role. Traders are bombarded with news, opinions, predictions, and strategies. Most attempt to act on everything, creating confusion and inaction or impulsive action. The minority focuses on understanding principles rather than chasing signals. They read, reflect, and act with clarity. Simplicity and understanding beat complexity and noise every time. So, what can you do to avoid becoming part of the 90%? First, observe your behavior and emotions when engaging with the market. Are you reacting impulsively? Are you seeking quick wins? Are you influenced by the crowd? Reflection is the first step toward awareness. Second, start building rules and structure. Define what types of trades or investments you will consider, how much risk you can take, and when you will enter or exit. Third, train patience and discipline. Recognize that the market will reward those who wait, not those who chase. Let's try a simple exercise. The next time you feel an urge to act on a tip, chart, or news, pause. Take a deep breath. Ask yourself, am I following my plan or am I reacting emotionally? Writing down your thoughts and reviewing them later will help build mental clarity and self-control. This is a small step toward thinking like the minority and away from the traps that ensnare 90% of traders. The journey to joining the minority is not easy, but it begins with awareness. Recognize the patterns that lead to failure and commit to observing and controlling your own behavior. Over time, the actions that feel uncomfortable, patience, discipline, structured thinking, become second nature. You will start seeing the market differently, not as a place of chaos or chance, but as a system where preparation, rules, and mindset create long-term advantage. Remember, survival precedes growth. Acting like the minority means prioritizing mental mastery and process over profits. If you can internalize this lesson and practice it daily, you have already separated yourself from the majority. The 90% fail because they repeat mistakes blindly. The minority succeeds because they learn, reflect, and adapt consistently. Your first steps toward mastery begin today. Observe, reflect, and prepare. The market will test your patience, discipline, and self-awareness, but the rewards for those who persist with the minority mindset are lasting and compounding. In future episodes, we will break down foundational concepts, technical awareness, fundamental evaluation, and behavioral strategies to continue building this advantage.